Hello everyone, welcome to part 2 of our discussion of allowances and accounts receivable. For this one we're going to show you an example using the T accounts that will help you work through your homework and understand this in a very practical way. So what I've done here is I have a copy, a little snippet or snapshot of the balance sheet for Merck, a big drug company, and we're going to utilize that information to start out. So if we can imagine we're at the end of 2019 and we're going to focus, notice my accounting equation, I've made liabilities really small because we're not going to deal with them. We're focused on assets, specifically these three T accounts, and stockholders' equity, these two T accounts. Now, writing journal entries could happen over to the side. All right, but I think it's easiest to see if we see these T accounts up front first, and then we can always write our journal entries and so forth. So we have accounts receivable net of allowance for doubtful accounts of 86. So at the end of 2019, our allowance was 86. It says right there. It says that our net is 6,778. 6,778. So our accounts receivable is not 6,778. Our accounts receivable is the total amount people owe us. So that this is what they're actually going to pay us. So this already has the allowance subtracted out. So we need to add it back. So we're going to take the 6,778 and we're going to add the 86. So the total amount they owe us is 68.64 at the end of 2019. So then we're going to think through 2020. Okay, we're going to deal with 2020. And we're going to do it in a really straightforward way. We're going to say, first of all, they sold, all right, 150,000. And that's going to be a credit to sales, debit accounts receivable, on credit. So if you want to write your journal entry, you're debiting accounts receivable, crediting sales. Okay, we'll ignore cost of goods sold for right now. Although if we were selling stuff, we would have to do that part of that journal entry as well. But because we're focused on accounts receivable right now, we're going to leave that alone. Then we collected some accounts receivable. So let's say that we collected 148,000. So that would be a debit to cash and a credit to accounts receivable. Debit cash, credit accounts receivable, 148,000. So those are the things that change accounts receivable, right? It goes up when we make credit sales. It goes down when we collect the money from our customers. Okay? Then the other thing that we want to worry about are write-offs. Remember, write-offs when we give up on collecting money for customers. So during 2020, we had write-offs of 89. All right? So when we have a write-off, we take it out of accounts receivable. We credit accounts receivable because we don't think they're really much of a customer anymore. And we debit the allowance. Okay? So, that is the situation at the end of the year. Those things happen over the course of the year, 2020. So, we get to the end of the year, and we want to estimate our bad debt expense based on the percentage of sales, based on our credit sales. So, we look at the total credit sales and we say, all right, it's going to be 1% of credit sales. All right, so we take 150 times 0.01. That's 15,000. Well, that's a lot. Let's go with 0.1%. Oh well. 0.01% of credit sales, and that would get rid of our. That would make it 0.00. 150. We can live with that. All right. So that 150 would simply be a credit to the allowance and a debit to bad debt expense. Done. Okay? So we just need to know what the credit sales are. We need to know what the percentage is. We make the journal entry. Okay? Our ending balance in the allowance in this scenario, okay, is going to be 86 plus 150 minus 89. So 147. Okay? Our total accounts receivable is going to be beginning balance plus the sales plus the increases, subtract the decreases. Whoops. $8,775. So our balance sheet would show, the new balance sheet for 2020 would be $8,775 minus 147, and then we'd see net accounts receivable, just like this. What this single number here would be 8628 for 2020. Okay? So that's how you do it on percentage of sales. All right? Now, let's do it on a percent of receivables. So instead of using this, we're going to go to our total accounts receivable. All right? So instead of based on total sales, we're going to do it on just the amount of accounts receivable. And we're going to say, all right, we think that it is 1% of our accounts receivable. $88. Okay? So we think the allowance should be $88. But here we see that the allowance is actually 3 on the debit side. Okay? So remember, our way we calculate this is we take the increases and we subtract the decreases. So it would have been a negative 3 or a debit for 3. Okay? We need it to be a credit for 88, right? That's what we estimate the allowance should be. So we look at what it is, we estimate what it should be. Okay? And it needs to be 88. So how do we go from debit of 3 to a credit of 88? We need a credit of 91, which would also be the debit to bad debt expense for 91. Let's see how we calculate. We take the beginning balance minus the debit or the decreases, okay, add the increases, and we get 88, which is what we thought it was, right? This is where we calculated what we thought it should be. This is what it now it is after we make this adjusting entry of 91. So now on the balance sheet, it would still be 87.75, but instead of 147, it would be minus 88, minus 88. Because that's what we have in our allowance. 87.75 minus 88 okay, equals the 86.87. Now, you're going to choose one or the other. You don't do both, right? Company's going to do it one way or the other, and they're going to do it based on which one gets them the right number here. This is the number that is most important. GAAP says, FASB says, the rules say that this number needs to be what we actually think is going to be collected. It really doesn't say how to get to that, except that you have to consider all the things about your customers, their financial situation, why they might not pay you, all that good stuff when you try to come up with this number. We've given you a couple of ways you could do that. Those aren't even the only ways that it could be done. But it gives it a pretty straightforward approach. Most of the time, we're going to use a percentage of the receivables that we have. The percentage of amount that's actually owed us at the end of the year is the best, typically most accurate way to get our allowance and to have the correct number on the balance sheet. So if you think about this, this is 100%, this is the 1% that's not going to pay us, and this is the 99% that are going to pay us.